The first panel today will be about one of the most important aspects of all of this, the money. I suppose it's a little bit odd to be starting with the money, but that's just how the schedule worked out. Nothing, no subtle message intended here. You know, over the years, the ag and food tech investors out there have grumbled a little bit that exits have been harder to come by. I think that's been changing over the last year or two, especially with the advent of SPACs, although there's been some pullback on SPACs lately. But lots of money flowing into capital markets, into SPACs, into later stage investing, which has trickled down to the earlier stages as well. So this panel is going to be talking about all of that. We have a terrific group of speakers that will be moderated and led by our friend Josh Hofheimer of Sidley, who is our sponsor. And by the way, I should say some words of thanks to Sidley for being a sponsor again this year. They've been a great partner and sponsor for our events on ag and food tech. So thank you for that, Josh. I should just say a few words about you, since you'll otherwise be too modest, Josh. Josh is a leading practitioner in the ag and food tech sector, does nothing but, is a senior partner at the great law firm of Sidley, which is an international law firm with offices just about everywhere. And we've been working with him. He's also a great moderator, I would say. So, but don't let that, he's also a good lawyer. So,
the pressure's on. Yeah, unlike Howard, I am an attorney, but a recovering CEO. So the flip side of what Howard is, and did spend a number of years in Australia running a small pre-revenue public ag biotech company. But yeah, this has been a terrific event. Thank you, Howard, and your team for putting it together. Nice to see familiar faces, or names at least, in the Slack and other places. And we do very much look forward to hopefully getting back together at Bonnie Doon next year or sometime in the future. So it's a jam-packed day, so I'm going to jump right into things. As Howard said, this panel is about sort of financings and exits, and we'll talk about a number of different things, but let me just start off by giving our panelists an opportunity to very briefly introduce themselves and who they're with, and their interest in this sector. So let's start with Ilanit. If you can come off mute and introduce yourself.
Yeah, hello, good morning, good evening, good afternoon, wherever you are. So my name is Ilanit and I'm zooming from Israel. I'm a corporate innovation and venturing expert, spent the past 20 years in building innovation/venturing units in multinationals. So far, 3 multinationals and 5 innovation venturing units. I've been with Nestle, been with Dole, i.e. Dole Ventures, and now working with Novozymes with the new alternative proteins division to build their venturing unit.
Thanks, Lenny. Chris Lai.
Hey, great. Thanks, Josh. Hey, this is Chris Lai. I'm zooming in from Hong Kong. So a little bit on the evening side for me. I'm one of the founding partners at the March Fund, along with Harold Schmitz. Prior to that, I was with Horizons. The March Fund focuses exclusively on technologies for the food transformation. So the journey that we're going to be talking about here. So thank you.
Thanks, Chris. Eli?
Hey guys, Eli Z, and I'm speaking out of New York, even though my Israeli accent probably hints where I'm from. With Credit Suisse for about 12 years, I've established and I'm running our global ag investment banking business. I've done about 50 transactions in the ag space overall, and great to be with you.
And Gil, bring us home.
Hi, everybody. Gil Horsky, great being here with you. I'm from Mondelēz International, which is the largest snacking company in the world, playing in chocolate, biscuits, gum, and candy. And I'm part of a founding team that started something called Snack Futures 2 years ago, which is the venture and innovation hub of the company. So we manage the CVC, all the corporate venture investments, and we also manage a venture building capability of incubating our own businesses within and externally from the company. I'm looking forward to talking with you all.
Okay, so this is, as you can see, a very well-rounded panel. And, which I think also reflects the diversity of the capital stack that you often see in ag and food tech companies in general, drawing on different investors and different investor categories. But let's not, delay the. Let's start with the big ticket item or the hot item and talk about SPACs and the role that they have or don't have in ag and food tech investment. And so let me just ask you, Eli, as the first question, because I think you just did one that you could share a little bit on with Benson Hill. But give me your thoughts, and also we'll hear from some of the others on, SPACs and their importance in this area.
Yeah. So look, first of all, as a bank, I'll be remiss if I don't do a bit of a commercial, but it's yes, we've kind of really led the SPAC market and the SPAC and the innovation in that space. I myself have IPO'd 3 SPACs this year, and I've done 6 SPAC transactions between ag and industrial automation. And look, I think it's tough. It's I guess my point of view is relevant at this very minute, this very second, right? Because this is a product information. The SEC is looking at it, and so things are changing. Having said that, if you think about food and ag specifically, the SPAC is an interesting feature, and there are 2 reasons for that. A, we're missing kind of a mid-cap stack of companies. And so if you're an investor looking to invest in public ag growth company, you cannot really do it because there's not meaningful number of public companies. I think the second is that ag companies, especially ag growth companies, have received significant investments and have kind of missed an exit event for various reasons. By the fact that I think the incumbent acquirers were kind of MIAs because they've dealt with their own issues. Bayer Monsanto, which is a deal I've worked on, Dow DuPont, a lot of other transactions that left corporates focused elsewhere. And most of these companies, whether pre-revenues or kind of fairly early in their stage, nevertheless, they're very significant money to be able to go on an IPO. And so what the SPAC allowed all companies is effectively have a company that is not necessarily ready to be IPO, that wouldn't be able to IPO in a normal course of event from a financial profile and sometimes from other areas, to basically shorten the route and an IPO and providing investors with really a late stage VC type of investment or pre-IPO investment in the public market. And so what it effectively provided companies is effectively last mile of financing to basically get the company from pre-IPO phase, pre-cash flow break even, sometimes pre-revenues as we're seeing, with significant money to be able to fulfill their plan. And so from that point of view, I think it's a great product for companies, and it's a great product for investors wanted to get exposure, having said that a bit early stage into the market. So that's where the market is currently now. We can talk about where the SPAC product could go, whether it stays early stage or whether it's developed. But let me pause here to see if there's any other comments or questions.
Chris, you were nodding your head like you had either agreeing or had something to offer on this as well. So maybe you want to throw in anything, contrary or alongside Eli's views.
No, I think Eli is right. I mean, there is sort of this separation of upstream and downstream on top of sort of the small, mid, large caps, right? And so I think some of the upstream technologies are just at a stage of development, right, where a lot of them are pre-revenue. So to me, looking at public markets and SPAC plays are maybe a little bit more long-term. Look, I think certainly in the next 5 years, depending on how the SPAC play also turns out, right? I think there'll be a lot of opportunities. I think the really downstream stuff that's really getting a lot of attention, especially within COVID, right? So the marketplaces, the deliveries, I mean, that's proven at least, I think to the market that there's a lot of interest in, touching on the food tech space, right? Especially where, IT and food start to come together. And I think what would be meaningful is when the public market starts to look at food and health as a value proposition as well, right? And I think new business models will come from that, and it will need to be tested, and it will need to be in the market. And so, to me, there's sort of a staggering of opportunities as we look through this. Yeah.
Yeah, I think for me at least, the SPACs, I mean, I think as you said, Eli, they highlight one of the challenges of this space, and I think that you all probably see it as investors, and I'd especially be interested, Gil and Ilanit, with your perspective coming from other. Well, Gil, you've been in sort of the ag and food space for a long time, but Ilanit, with some of your other experiences, and Chris too, that there isn't a huge sort of middle market exit play and mid-market players in this space. And as I always said, the big ones are kind of wrapped up with their own consolidations and focused on each other. So, that seems to me from one of the challenges, and has always been one of the long challenges of this space. And it's not just addressed by SPACs, but, other issues, the companies have to confront when raising capital here and investors looking at deploying capital here. What do you see from sort of a big picture perspective, Ilanit, as we're kind of getting the day going, that, makes this one of, that makes that a challenge here and makes this a little bit different?
Yeah, I'm noting because I'm agreeing with you. I think that the biggest problem that we see here is that the agri-food industry is underfunded for the size of the problem or the size of the opportunity, if we're looking for, from the positive side of the cone. I've been one of the founders of the Israeli ecosystem together with Gil and other good people. And 7-8 years ago, the total investments in the field were a couple of millions. So to see today that total investments in 2020 were top to 22 billion, wow, that's a great achievement. That's fantastic. That's amazing. And it's almost 40% plus, 40% compared to the previous year, 2019. And that's because of many reasons. And COVID has been a positive influence on this industry. However, when I look at other industries, and I always look at other industries to understand and to learn from then the numbers are a little bit challenging. So think about mobility, for example. Mobility startups raised this year over 200 billions, and the industry is almost the same size as we are. That's a big number. You look at fintech industry. The fintech industry, fintech startups raised over $100 billion. We look at cyber. So cyber companies raised only 8 billion. Wow, we raised more, but the industry size is valuated at around 150 billion. So percentage here is just, I think it's whatever number I will pull out, the gap is evident. The gap is clear. We need more capital here. We need more players in this field, and we need maybe to look for other mechanisms of investment. So no wonder the SPAC are popular and will be popular, but we probably need to look at more and more creative tools to bring more people, companies, investors in this play. Yeah,
I mean, I would like to build on what the previous comments and maybe take a different angle, and I'll take the optimistic angle here tonight and say that I think this is a phenomenon. We're at an inflection point for this industry, and it's super exciting because there's all these different forces happening here at once together. I mean, we're talking about, we have a whole new crop of entrepreneurs that are, a lot of them experienced, a lot of them are serial, a lot of them are coming from other industries, coming from biotech, pharma, big data, AI, etc., and taking their know-how into food. They're much more ambitious. We're seeing companies coming to address much bigger problems than 2 or 3 years ago. We're seeing at the same time a huge development of technology. I mean, some of the cell-based companies, I remember some of them were talking with me in 2016, 17. I thought this is like, I thought this is science fiction. I mean, now all of them are talking about who's going to be, selling faster. I mean, there's still a way to go, but the progress has been much faster than any of us expected, even they expected. And then we're seeing a lot of advancement here actually on the financing. Yes, it's underfunded, but there's so many new investors. I mean, Chris's new fund, there are many other new funds. There's SPACs, there's a lot of great angels coming in, governmental support in places like Singapore, Israel, Europe. So I think net, what we're seeing is actually, I think, kind of all these forces of really actually, bringing the industry a step forward. And I think the SPACs and the IPOs and even exits, I mean, Prospera was sold a few last week. All of these are actually a very important proof point, because one of the challenges the industry had is we had a lot of M&A, and we still have a lot of M&A on the brand side, on the B2C. Companies like ours and our peer companies are doing a lot of acquisitions of smaller, medium-sized brands. But actually on the kind of more food tech, ag tech companies, the last few years have been a bit slow. And I think we're seeing now a lot of activity happening on the IPO, bigger rounds, even some M&As. So it's a very exciting time. And I think for me, the SPAC is just one more thing that is giving another kind of headwind and kind of, positive momentum to the industry.
I think, Josh, maybe one more point to add. I've seen this industry for quite some time. I've IPO'd Evogen back in 2013 in Arcadia Biosciences, and I've done the Benson Heat SPAC last week. I think there is a big difference, and I 100% agree with Gil. There is a big difference in the undertaking that these startups are trying to do. So think about Evogen, right? They were pretty innovative, but they used the incumbent value chains. They wanted to distribute their seed or develop their seed through Monsanto. Same as Arcadia, they wanted to develop their seed as some of the incumbent. And so the previous generation startups all tried to go through the supply chain or through the incumbent channels, and so got stuck when the incumbent said, look, I'm not giving up kind of my trade, you have to go through me. But if you look at guys like, Zymergen, Benson Hill, FBN, what these guys are trying to do is a huge undertaking. It's redefining the value chain. Benson Hill with, farm to plate, FBN with basically culminating the entire distribution, input distribution channel. Zymergen basically threatening guys like DuPont with biological products. And so the undertaking is huge. And so you only can, and again, I agree with Ilanit, you need to match it with significant capital. These rounds of $50 million and then another $75 million, startups that are trying to disrupt such big industries cannot plan with kind of $50 million. And so the SPAC and Benson Hill having $625 million, it's a serious amount of money for them to disrupt a meaningful problem. So I think that is a meaningful change, as obviously, as well as an IPO. You look at guys like Zymergen raising a significant amount of money, that capital is becoming more and more available. And investors, public investors or pre-IPO investors are definitely capable and looking at that space.
Yeah, I mean, it is fascinating, as you're saying, to see some of the larger deals that are starting to pop in this sector, and sort of that increasing complexity that it creates. Let me just pause for 1 minute, since there has been Gil, you were speaking optimistically about lots of different things. So tell me, just as a sidebar, what for you is the most interesting deal that you've seen over the last 12 to 24 months in this space?
So
just pick one.
Yeah,
and then the rest of you, if I ask you, you can't pick the same one. Sorry.
That's okay. I'll self-promote ourselves. I see, we should all do that these days. So we on our side, I think the Mondelēz side, we actually invested in a venture deal in a company called Hue Kitchen. It's a brand from New York City that it grew both from a restaurant, later on became a very prevalent brand in the chocolate cookie biscuit aisle, very healthy products. And we actually 18 months later, we bought them. And I'm saying that because, as a CVC, that's a lot of times, you're always told kind of, there's always this kind of feedback for CVCs that they invest, but they actually never acquire later on. So this was quite a fast one. And, we're quite proud of that, integrating that and partnering with them. And I think a second one, I'll just say, I know you only allowed the one, but I won't follow the rules this time, is I think I'm actually looking forward to the upcoming things. And, Oatly, I think that Oatly IPO is going to be quite a big step up for the industry, similar to what we saw with Beyond Meat 2 years ago. So that's going to be an interesting one.
Okay, thank you, Gil. What about you? Not Gil. Sorry, I just called you Chris. What about you?
Well,
most
so
interesting deal?
I'm gonna go on a little bit of a. I don't want to break any industry stigmas here, but I mean I'm gonna talk about a deal that we didn't actually invest into, right? But just got announced recently. So Zoe raising 253 million for the Series B. I think this is interesting for a few reasons, right? I won't comment on the merits of the deal itself, but so one is it's showcasing the diversity on the investor stack, right? That's coming to the table, and celebrities and sort of high net worth individuals with an element of social presence, right? Social media presence is starting to kind of come into the investment fold, which is great because I mean it does bring awareness, right? And I think everybody, the capital is starting to, kind of have a bit more legs, right? So to speak, in terms of what they can support these companies with. But the second and really interesting thing is people are starting to really, put capital into the value proposition in data, right? And actually seeing that translate from a not necessarily consumer behavior perspective, right? But certainly from an information and organization of that information and insights taken from that information. COVID was evidently a big kind of push for Zoe for what they were able to do and onboarding 5 million users. But this is going to only increase, right? I mean, this is the consumer trend that has been happening. So for those reasons, I think it's really interesting. And it's one of those, again, shows the range of deals in this space, right? Everything from the ag tech deals that we're talking about here all the way to marketplaces. But, it's really starting to get into the AI, right? Like Neuritas and these kind of deals that are coming up. So I mean, it's exciting, right? Because these are compounding exponential technologies, right? And it's just fundamental to the sort of technology development that this space is going to start to see. And I think the challenge now is, and by the way, I share the optimism, right, with everything and everybody's been talking about. I think in a lot of ways, necessity is the mother of all invention, and we have beyond that also a massive commercial opportunity. And I think it will, I'm excited because we have the opportunity to sort of start building that, right? It's early enough that it's treacherous, right? But it's the opportunity is bound. So.
Yeah, that was actually a terrific setup for yourself, Chris, because everybody's going to come talk to you and gather and say, well, why didn't you invest in them? So that's perfect. But let's go back into this, which you all have raised a couple of points on. People talked about the complexity of the capital stack, and I think that's a really important observation for, especially I think for sort of. We've also talked about the next generation of entrepreneurs, driven, ambitious, not necessarily, who grew up in this space. I think a lot of early stage ag tech or food tech people, managers, were, operators at some of the bigger companies and saw opportunities and sort of niche problems or incremental improvements that could be made. Or, were some pure scientists that, were looking for trade type exits. But we've got, as you said, we've got a different class of entrepreneurship and leadership, but we have an incredibly complex capital stack, I believe, compared to other industries. And, how does an entrepreneur and perhaps a newer entrepreneur to this sector, navigate that? How should they be thinking about, from your perspective, the capital stack that they're trying to put together? And the kinds of investors that need to be there? Do they want, the name and the brand opportunities? Do they want real knowledgeable internal operators? Do they want CVCs? Do they want specialists? I mean, Ilanit, you've come from several different, sort of worlds and advised different people, and probably have seen some very interesting, sort of capital stacks and formation in companies. Maybe you have some thoughts on this, because it's certainly one I struggle with, trying to, working with entrepreneurs and the like, and advising them on the best sources of capital that they should be going after. And they hear different viewpoints all the time. You should have no CVC, you should have at least 2 CVC, you should avoid the generalists, you need to have generalists. There's arguments on both sides.
So my view of that is that you should look for the money that will allow you to grow. the right smart money that will allow you to move on. And I think every company has its own trajectory. So yes, CVC, yes, but it really depends when and why and what is the essence of collaboration. And I think that also public funding is really a good source. And Gil mentioned Israel and Singapore. I think both has really good public funding programs. So the Israel Innovation Authority and the EDB and ESG, which are the equivalent of Singapore. So public funding is also a good opportunity. There are, of course, many private investors which are involved, many companies in the food industry, which are the size, let's say 2, 4, 5 billions, which are family owned. So they have their own family business and they are a little bit more patient maybe than other capital mechanisms. So the answer is yes. I mean, you should have a variety, you should have a balance, but you definitely need to make sure that you choose the right investor for yourself, for your company, that will allow you to go together with the investor and grow the company together. So I think that's the most important part for choosing the right investor.
Maybe one comment here, because I've been in boardrooms with various investors that some of them have been in companies for 15 years and are kind of trying to get out. Some of them have, some of them have been shorter. The most important, I think, feature that I'm seeing, obviously outside of the additional value, et cetera, is patience. There's a lot of new money coming into ag, and it's kind of, especially those coming from different areas and think that things are going fast. And you're actually getting into a shocking reality that ag and food is typically slower than other industries, and in many cases tougher. And so I think it's important to level set with investors and kind of make sure people understand this could be a long journey. This could actually cost more than we planned. There isn't kind of, we're going in untreacherous water. And so you need the right investors with the right patience to join you at the journey. And I cannot stress that enough, because if an investor is getting impatient after 4 or 5 years, and needless to say, in ag, you have the commodity cycles that are impacting. You could be in there for an unpleasant ride. And so, from that perspective, I think, and obviously, you need someone to support you through multiple rounds. And so, patience and vision of investors is extremely important. At least, seeing these companies at the late stage of their their funding cycles.
I would fully agree with that. I think both comments. I think, I know everybody gets advice, and I don't think there's a perfect formula of who needs to be on your cap table, but I think, at the end of the day, it comes down to people, and like everything in life, having good investors that are gonna support you there in the tough times, because I've never seen a startup that doesn't have tough times, that are patient enough and actually have. I think there's a lot of added value in investors that understand the industry. It doesn't need to be that your entire cap table has to be that way, but there is, because I think, to Eli's point, I think, the food and ag industry are very different, and from the tech world and other places, the lead times, the capex, the technical challenges, especially as we're moving into more and more science-based companies. On the food side, that's even going to be, require even more patience and know-how in those worlds.
Yeah, I think you're right. I think, it is extremely important for both the investors and for the entrepreneurs to be able to communicate, but also for the entrepreneurs to understand sort of, what the commercial channel looks like and what adoption looks like. And, depending on whether you're upstream or downstream, that can be very different and can be a very different sort of uptake process. That can be a real challenge. From my experience, I agree with you, Gil, on the importance of having, investors that really, are knowledgeable in the sector. And some of the ones that are more specialists or more focused on this sector are extremely important, both for credibility, but also for understanding the marketplace and being able to assist with sort of commercial. But a lot of the really big money the big checks comes from, more sort of generalists, or sometimes from sovereign wealth, like you saw with Zymergen in their latest round. And, which we actually represented GIC in some of that. But so it's a difficult balance because, to do, as you said, Ilanit, to grow the way you want to grow may require a different investor pool who are willing to commit, with different visions and the like. I guess it also raises for me the question of, and we only have a couple of minutes left, but the question of, what are some of the international opportunities, and again for investors or entrepreneurs, that are somewhat newer to the space, when they're looking for capital from abroad, how has that market, from your perspective, Chris, or we actually lost Ellie to a board meeting, but Chris or Ilanit, how is that sort of changing? And, do you see that as, the sort of mix of international capital pool, is that something that is, becoming easier to accomplish, perhaps more difficult, in today's climate than in other climates? Where do you see that playing out? We have an international day planned for us. We can't end without talking a little bit about international capital too.
Yeah, well, so I mean, for me, I think maybe using, I'm sitting in Hong Kong, right? So obviously the Greater China area, the Greater Bay Area, as an investor, or at least one of the partners in the fund sitting here, I think one of the things that is exciting is just the information sort of, the information saturation, I think, right, amongst investors right now about the opportunities in food tech are global, right? And I think that stretches capital, from this region all the way to sort of the European regions, et cetera, et cetera. And I think one of the things that I'm more sort of cognizant of is that, again, is looking at the market sort of in a segments, right? I mean, food tech in terms of, ultra downstream marketplaces, again, delivery models, et cetera, in a place like China is super exciting. And that is not necessarily taking capital away from China into other places, right? Alternative protein is starting to burgeon in China, right? So in 5 years' time, the estimation is like $13 billion market, right? The question kind of actually comes, what more interestingly is, how many of those companies will be local companies, domestic companies that grew out of China, or are they going to be companies that are brought into either joint ventures or other, deal structures, right? That Josh, very super well, right? And I think that this is really where the capital players will play a role in that. And so I think part of why we sort of sit Trans-Pacifically is, we're not betting, but we're sitting next to the largest mouth in the world, right? Because that's going to be opportunity. That's going to be opportunity not just for returns, but that's going to be opportunity for impact, right, on large population pools. And so, when I look at that kind of growth and in interest in capital, but also in inbound and outbound, I think that it'll be hard to ignore sort of the Asia region, right? So for us, we keenly sit here and look at that. I see Israel. I see a lot of, in the Scandinavian regions, as areas that are doing a lot further upstream technology development than this part of the region. And so there's naturally that leapfrog opportunity, So how does that all happen comes down to, I think, a global collaboration effort, right? I mean, the key question that we ask ourselves is, how do we make a food system democratic at scale, right, globally? And I think that's an important consideration when we think about international finance and also deal making. So,
I want to.
Go ahead, Ilanit, and you could be our last one.
I want to build on Chris' points and to point also on another trend. So there is there's the trend of Asian entrepreneurs and money. And I just came back last summer from a year in Singapore, and I'm working very, very closely with All Asia Fresh, which is headquartered in Singapore. And I've been exposed to an amazing ecosystem in Asia, both from investors and entrepreneurs. And I don't think we understand that. I don't think we fully grasp it in the West. And the trend that I see is a kind from Asia for Asia, and there is a reason, because because the challenges in the agri-food system may be a bit different, and you don't solve the same problems with the same solution. Think about agriculture problems like smallholder farms versus big farms with big corporates. Think about alternative proteins and their culinary culture, which are different, and so on. Why you should be using China and Asian pea proteins, but this has nothing to do with the culture. Just as example out of many. So I see the trend moving towards more like regional pool of investments and regional companies. This is one trend. And the second trend that I want to highlight with this respect is the trend towards the participation of corporates, for corporates money, but a different size. We usually speak about the big guys, the 25 billion companies like Danone, like Gil's companies, Mondelēz and Nestle, which is almost 100 billion and so on. But there is another pool of companies, another segment, which is the segment of companies which are 2 to 8 maybe billion companies. These are actually the 80% of the industry of the agri-food industry is at the level of in the hands of those companies. So the big companies control only less than 20% of the overall industry, which means there is lots of potential in this segment of smaller companies. They're not small, right, in any size, but they are smaller than the usual suspects for startups to get money. And those companies in those sizes are razor sharp and funding opportunities which really contributes to the bottom line in the near future, which are linked to their growth, core growth, and not assigned and not adjacent, but core growth. And they are highly motivated to solve their problems because they don't have any other opportunities and don't have money to spray and pray. So I think that's another trend that we see when it comes to capital in the agri-food space, and this is this specific segment of companies.
Yeah, but don't you think those are going to be hard to target for sort of really broadly disruptive type technologies that, as you say, don't go necessarily to the core bottom line, at least immediately for a company like that, that's that mid-market, $8 billion, $12, $10 billion company? I don't want to end on a disagreement, yeah. but
no, I can only say from experience with working with those companies and also with the other side of the group, right? From Nestle to Dole to Novozymes, and I am extremely motivated and optimistic about how they deploy money and how they work with startups, how they really create win-win opportunities to grow this, to solve their problems and grow the agri-food tech field. And I'm incredibly optimistic about this trajectory.
Yeah, look, we could talk a lot more, I'm sure. But I don't want to screw up the calendar and the agenda, too much. So I'm going to wrap us up there, and thank you all for joining us, Nick, Gil and Chris and Ilanit and Eli as well. I'll hand it back to Howard now and Nick to move us into the next section of the program.